Hello, everyone. My guest today is Mike Brown. He's the founder and chief enthusiasm officer and inventor of the patented FISION digital asset management platform. It's also a sales enablement platform. He attributes his experience to serving as a U.S. Navy submariner and U.S. Navy diver as the foundation to his success as a corporate executive and entrepreneur. Mike, are you ready to take us to the top?
I am.
All right.
Good morning.
You bet. Thanks for joining me. I appreciate you coming on. Thanks for your service. And so tell us about FISION. Why do you attribute success in the Marines to your success here at FISION?
Well, slap your mouth calling me a Marine. I'm a Navy guy, right?
Navy. So I made the cardinal sin.
Yeah, former. In a past life, I've had about 30 some years of business since I was in the service. But just the whole dedication to a purpose, to a central purpose, the dedication to something bigger than yourself. The leadership attributes, I gained all of that when I was in the U.S. Navy. Very proud of it, and I'm very thankful for those that continue to serve.
Let's dive into the company. What's the company do, and how do you make money? What's the revenue model?
Well, my background in business was in the health club business for many, many years, a product that many people across the country now, and actually in Canada as well, know, Lifetime Fitness. And that was a monthly dues annuity business model that was very, very successful. The business that we're in is very simple, right? We're a patented cloud-based technology. But what we do for large enterprise companies is we simplify how they distribute their brand materials, and we simplify how they enable their frontline employees and their sales teams to use that material. And in that, they pay us a one-time setup and a monthly license fee, and it's a 82% gross margin business. So it's a fabulous business.
It's a good business. There's no workout equipment you have to buy to get launched there, right?
No, what's interesting, we in the fitness game, you'd have to continue to go out and develop additional locations at 25, 30, 35 million a pop. With FISION, we've got about 8 million total invested to date, which is far below our competitors in the industry. We've gotten a great deal of traction, but we can have unlimited memberships in the cloud from these various different global companies that we serve.
That's right. And ignoring the setup fee originally, on average, what's a customer paying you? I mean, are we talking $1,000 a month, $10,000 a month, $100,000 a month?
Well, I have two stratums of customers. We look at it as kind of the SMB market. My SMB market is probably $3,500 a month on average, right? My enterprise level ranges in the 15 to 20,000 a month. We've got some that are as high as 30, 35,000 a month, right? So it's a fairly big range, but all blended, we have tripled our monthly annuity on an average client basis in the last year. We've doubled the total annuity value just in the last 12 months.
While still driving revenue growth.
Yes.
Yeah. Because if you have $1 million a month customer, it's easy to just fire the rest of them and lose revenue, but increase your ARPU.
Yeah, that would be pretty risky. I don't think we have any customer right now that represents more than 5% of our total revenue.
Okay. And give me the revenue breakdown in those two cohorts. Are they 50-50, or is the enterprise make up way more?
Enterprise right now is probably managing to be 2/3 of the total revenue. We actually discovered, all small businesses start out and you hope somebody wants to sit down and have a cup of coffee and hear your story, right? So you typically get focused on small business because they're easier to get into. Well, we have found that the traction selling into the small business channel is harder to accomplish than selling into the large corporate global enterprise channel.
Because they don't have the tech muscle to understand digital asset management, or
they've got a bigger pain point, right? So it's a multiple of problem at the global enterprise. So if I'm a small business with 50 or 100 employees versus an enterprise that has 20,000 frontline sales reps, the dynamic of problem created amongst 20,000 sales reps, if they're off-brand message, is a huge pain point.
Yep.
So we have learned through trial and tribulation, right, that calling on global enterprises are our sweet spot.
And what have you scaled to today in terms of total customers using the platform?
I'd like to keep that. We're dozens. We're not hundreds yet, but we're dozens. And we have eclipsed now on the annuity run rate of over $1 million
Oh, that's great.
here on the annuity basis. So it's kind of a critical point, and we should see 3x that this year.
That's really great.
So, yeah.
Now, where were you? Can you give me a sense, since you shared kind of you just passed $1 million? Can you give me a sense of growth? Where were you at about a year ago?
Half that.
Oh, you were okay. So you had about 100% year-over-year growth.
Yeah, we've got 100% January to January on our annuity, which is awesome.
Yep.
And we should see 3x that by the time we end this year. So it's really starting to take off for us.
And we haven't. Go ahead.
This cycle on enterprise, it's really something that you have to be mindful of. Enterprise is probably easily in the tech space 15 months on average from the time that you engage until you have a profitable generating client, right?
That's right. That's right. Now, and we haven't talked about your extra revenue kicker here, which is you kind of smooth out cash flows a bit with an upfront, it sounds like, setup fee of some kind, right?
Correct.
Yeah.
It's minimal, and strategically it's designed to stay underneath an organization's capital expenditure guideline, right? Because once it goes above the CapEx guidelines for a company, then it typically needs a higher level sign off. We try and stay at the operational level with the companies that we serve.
Yep. You mentioned you've invested about $8 million so far. Was that all money that you've raised, you fundraised, or is that from cash flows?
Half of it is mine out of HIP National Bank, both branches, right? and the other half is from friends, family, small business folks that know my track record and so forth. And we're just now going to be going out and doing a larger raise sometime this year.
Oh, that's great.
Lift us to the next level, right?
How do you think about, well, let's put some timestamps on this so we understand more of the story. When was year one?
We've been at this now 6 years.
6 years. Okay. So 2011 was launch.
And we kind of puddled around with it a little bit. I was retired at the time. I had cashed out my chips from the Lifetime Fitness Casino, that public, and I left that company about 4 years after we went public. So it took us a couple of years to develop the first product. The market wasn't quite ready for it yet. We've only seen in the last 24 months where digital asset management and localized digital asset management has really become the norm. Prior to that, everybody was focused on getting their CRM in place, Salesforce, or getting their Marketo or Eloqua lead generation machine in line. And now they're all scrambling to say, hey, how do we control our digital material? And that's when we really started to see the lift.
Yep. And obviously with a SaaS company, churn is critical. You have an upfront fee, which probably helps create a little bit more stickiness, because there's serious customers signing up. What is your churn today, and how do you look at that number?
The industry will suggest 15% annual attrition.
Logo or revenue churn?
Total contract site, so they'll not renew or they'll cancel. We haven't seen that yet. We're probably about a third of that. So we've been really, really blessed, and I attribute that to the exceptional service that we provide post integration and setup of our tech. Right, tech is one thing and it solves a problem, but people still do business with people. Mm-hmm. I don't care what industry, I don't care what business you're in. You're talking to another person, and you're helping them solve a business problem, a pain point. And so you have to be focused and keep it real.
Mm-hmm. You also fit, people watching the YouTube version of this, if I had digital assets I wanted managed, you fit the profile. Just talking to you, like with the background in the Navy, how articulate, and you talk very precisely. I'm like, if I want to trust someone with all my digital assets, you fit the model perfectly. So it makes perfect sense.
And I'm Irish.
And you're Irish.
I'm Irish. How can you go wrong, right?
That's funny. All right. Very good. And talk to me more about the economics here. What are you willing to spend to acquire these customers, and how quickly do you like to get your money back?
It's we're really not at that level of specificity yet. We've got a ballpark on it. It probably costs us several $1,000s to acquire the client.
Sure.
Our setup, we typically make on the setup barely enough to break even on the actual setup itself. Very labor intensive in the front end, but long term, this is an 82% gross margin business model. So think about that for a second. That's amazing. So at the EBITDA level, which is earnings before interest, taxes, depreciation, whatnot, right? It's 45 to 50%. That's one of the healthiest business models out there. That's why the SaaS space is growing so fast. In our particular area, it's expected to be 22 billion within the next 12 to 24 months, growing at about 16% per year. So it's exploding right now.
So Mike, just to be clear, it sounds like you're making back your money with the setup fee and the first month of the annuity payment. I mean, you're making your money back in less than a month.
Yep. Well, we should get it back within about 90 days typically.
Okay, got it.
Right.
And then interesting question here. You mentioned that you're potentially going to raise this year, but you also just mentioned, I mean, you're taking 45% to the bottom line. Why not fund growth just with cash flow? Because
your costs, we're not profitable yet. And if you look in the industry, many of your tech companies, your SaaS companies, they're not profitable for multiple years into their endeavor.
Oh,
right?
got it. You're not at 45% EBITDA.
You have to manage your balance sheet with additional capital raise, right? So we've got $8 million into this. Half of it is, as we said, was mine. But we still have a burn rate that's negative until we get above critical mass. So, and that's very typical. If you look at
Mike, that's why I asked the question. I must have misheard you though. I thought you said you took 45% to the bottom line.
The model itself is about a 45 to 50% EBITDA model once you've established critical mass.
Got it. You're still burning, trying to get to critical mass.
Yeah, and that's and if you look at the market,
it's very typical.
It's probably less than 30% of your SaaS companies out there are actually showing a profit.
Yeah, it's very typical.
On purpose, right?
Yeah. What's your team size today?
We've got 15 plus an augmented team, so we're probably close to 20 headcount right now.
And where's home?
Home is, my home where I'm talking to you today is Apple Valley, Minnesota, if you can believe it.
Is that where the team is?
No, we're in downtown Minneapolis. So if you're familiar with the Twins baseball stadium or the Timberwolves basketball stadium, we literally are shoehorned right between the two states. We're at ground zero in the famous warehouse district in Minneapolis.
That's pretty funny. All right, Mike, let's wrap up here with the famous 5 one-word answers here. Number 1, what's your favorite business book?
I'd have to say by Gino Wickman. It's a book called Traction, and it encompasses many of the theory that I've deployed over my 30 plus years of business experience.
Number 2, is there a CEO you're following or studying right now?
A gentleman just down the street. There's a company in town called Calabrio, and the CEO of that company is a guy named Tom Goodmanson, and he is a rock star in the tech space. Tom Goodmanson.
Tom Goodmanson. All right, number 3, besides your own, what's your favorite online tool for scaling the business?
Our own product, Volero, which is a team collaboration tool. It's really cool.
Volero?
Volero, Volerro.
Got it.
We just acquired that company this year. It's added to our tech stack.
Oh, interesting. Why'd you make that acquisition?
They actually work on the front end with the client company and their agencies to collaborate on creating the content that ultimately gets loaded into FISION and gets distributed to the local level by FISION. So they were a natural upstream play for us to extend our services.
Generally a small acquisition, sub $1 million?
Very small, and we did it purely on stock.
Nice.
We're publicly traded on the QB, so we used our stock as currency on that.
What's the QB?
OTC markets on the QB board. So we're publicly trading right now. We just started publicly trading this year.
Wait, what is it, Mike? I don't know what that is. What is a Q? What's
NASDAQ? Stock Exchange. The over-the-counter markets are subordinate to that. It's more of the small. It's the penny stock, small board.
Why did you do that? Just because the admin cost of being public is so high at your level?
It offers validity. It offers transparency in our reporting. We're a cleaner company. It allowed us to, as this example, to buy a company with our currency being stock, and it'll give us the opportunity for a platform to grow off of. Our intention is to lift to NASDAQ within the next year.
Interesting. All right, number 4, how many hours of sleep do you get every night?
I'm lucky to get 6, and this morning it's less than that. So.
And what's your situation? Married, single? Do you have kids?
I'm married. I've got 2 gorgeous daughters in their mid-20s. No ideas, fellas. They're my girls. Right?
You got to get through Mike first. All right. And how old are you, Mike?
Well, I'm going to be 60 in in next month.
That's
actually.
great. I would have never guessed.
So
That's great.
my second half of my life, I'm going to go out and build something new.
I love it. All right. Last question. Take us home. What do you wish your 20-year-old self knew?
I think the thing that I didn't do as well was take the time to appreciate the path and the journey as much. Whether you want to climb Kilimanjaro or if you want to swim out of submarines like I've done in the past, jump out of airplanes, enjoy the path, enjoy every day and the people that you come across, because it ends up being the memories that you have when you get to my stage of life, right?
There you guys have it from Mike. Enjoy the process and the adventure with FISION. Digital asset management had a big success with Lifetime before that. Served obviously the country before that as well. Credits a lot of the success he's having in business to that service. But the company's doing very well. They put about $8 million in the company, $4 million of his own, launched in 2011. Team of 15, 20 maybe based up there in Minneapolis, serving currently the low dozens in terms of customers. They're doing about 88 grand per month right now, or $1 million run rate. That's up 100% year over year. So about 44 grand a month in December 2016, or about $500,000 in AR. Then super healthy churn, less than 5% annually. CAC about $3 grand, payback, 90 days. So super healthy economics, looking to raise capital maybe this year. Mike, thank you for taking us to the top.
Hey, and remember this weekend, go Vikes.
Go. There you have it. Thanks, Mike.
All right. Have a good day.